What up, everyone? Welcome back to another episode of Wake Up with Wops. We got that ceasefire just for 2 weeks. Hopefully, they make a deal within that, and the market would love to see that. But we have some good short term news with this ceasefire. And look, market likes it. We gapped up above the 200-day average, breaking through that. We've talked about it in my last couple of videos. Go check them out. We've been pretty spot on recently. And now gapping up to that 50-day average, maybe a pullback, but as long as we hold these moving averages, that 200-day average, or we hold around here in the 50-day average, that is looking pretty bullish to me. But like I said, this is just a ceasefire, pause to the war. It's not over yet, so we still gotta watch out for that. But it's looking good above the 200-day average for the QQQ and above the 50-day average for the QQQ. It's very, very nice. Some consolidation here would be nice, or a pullback and hold of these moving averages is very, very bullish. Love to see that. It might be some time to get into some stocks now if you haven't been in any positions. If you've been following the channel, we are in some positions. We'll go over it now. IWM gapping up to that resistance level, maybe a pullback and holds. Very, very bullish for the small caps, the Russell 2000. Now let's go over some of my swings. Core we've been holding this for a while, turned it into a position trade when we held through this earnings, and now above that 50-day average and going to continue right into our 200-day average, which is going to be some resistance there around 103. But I'm really liking this. I like this stock. That's why I decided to hold it through the earnings and making this into a longer term positions trade. Next earnings in 42 days. We'll see if it reaches the target, if it has a good big bounce. If not, probably going to continue holding this, as this is a recent IPO stock. And if it continues to the uptrend, I see it could even reach a high of 184. So this could be a longer term play for me. Google, we actually held through our stop on this one just because I really like Google. I decided to also make it a position trade, which just means a longer term hold. So I didn't get stopped out there. I continued holding through the volatility. Looks like it rounded about right above the 200-day average and now gapping up above some key moving averages on the 50-day average. We're still in the red for a lot of these trades, these positions that I'm in, but it's looking like it's getting back on trend and we maybe found that local bottom. So I'm liking it. AMD, this is the one that is in profits at the moment, looking very strong. The 9 EMA is crossing over the 50-day average. Uptrend starting to begin. Hopefully we reach that target price. We have earnings in 27 days. Apple in the red and under the 50-day average. Probably the most disappointing out of these four, but it's still looking pretty good. I like that hammer candle yesterday. Hopefully we remount that 50-day average around 261 soon, and then continue going higher and make it for probably a breakout of this last high. Quick side note before we go into some sectors and looking at the market. Go look at this article. I talked about a book I read, Trading in the Zone by Mark Douglas. I really like this book, and I was reading it through the months of choppiness, and I believe that's what helped me hold these stocks, these holdings I have, and not really have any emotion while holding it. I really, really recommend reading it. If not, read this article that I posted on X. Back to reviewing the market and other sectors. RSP, I believe I haven't really talked about RSP recently on this channel, but this is basically the equal weighted SPY. So all the stocks, the top 500 stocks, are equally weighted, and this is the price action for that. You're going to see, compared to the SPY, we went below the 200-day average. That means a lot of mega caps are probably going lower, while all the 500 equal weighted went a little bit lower, showing kind of relative strength and holding that 200-day average compared to the SPY. Anyways, speaking of RSP, we're right at that 50-day average. It's looking pretty good. Biotech, I really like biotech. We've been talking about this on X and on YouTube. You're going to see here just consolidating in this flag pattern. It looks like it's breaking out. You got the moving averages curling up, showing upward momentum. I'm liking that. So These are indexes, guys. Just go on ChatGPT or you could go on Google and just search up stocks in XBI. It'll give you a list of biotech stocks you could enter. I really like healthcare right now too, as it dipped down to that 200-day average and now curling about. You see that 90 EMA is about to cross over that 20-day average. Short-term uptrend intact, and it held that 200-day average. You're gonna see it's been very hot recently, back in 2025 to end it, consolidated, not pulled back. I think we get that second run soon. So just look for healthcare stocks. I might actually enter into a healthcare stock. Housing is another one that's been beaten down, even worse, under the 200-day average. So look for some housing stocks, as this could be a kind of oversold index play. XLI, talked about this. I really like this. I can't believe I missed it, and I've been talking about it, but can't beat yourself up. Really strong move. Broke out from here back in December 2025, early January 2026. You're gonna see nice run, but it's pulled back to that 200-day average and this previous breakout zone that flipped into support. We've talked about it, and since then it's been on a nice run, just remounting moving averages, and today above that 50-day average. Would like to see some consolidation or a pullback, and then if it holds, maybe I could enter. So it's not too late, just got to be patient for this industrial play. Banks are starting to look interesting. This is the finance sector, XLF. It's been getting hit pretty hard, but now above that 50-day average. Short-term moving averages are curling up. Let it catch up, and I believe it'll break through that 200-day average. The regional banking, though, is doing a little bit better than XLF. You're going to see here below the 200-day average, and KRE is above it and above the 50-day average. Looks pretty extended. Just wait for a pullback and let the moving averages catch up. And I'm really liking this. Might go into a regional bank stock. IGV today is actually down while the market is actually green. Look at this, all this green in the index. Very strong day, and IGV is down. I believe that is because of Palantir. If we go to PLTR, you're gonna see it is down today 7%. Oh my god, getting hit hard on some news that Michael Berry warns that Palantir will likely lose enterprise to Anthropic. That is that AI, I believe, Claude. And just getting hit, this sector, software sector. But if we look and zoom out, this is a bottom. As long as it doesn't break this low, it looks like it's a W pattern bottom. And if it remounts that 50-day average, IGV will probably be a very good index play for a good low risk, high reward play. Could target the top and just have your risk below this W bottom. I'm really liking this sector. Hopefully it recovers and Palantir recovers tomorrow. And this is just an overreaction to some headline news. SMH, semiconductors, looking really good. We're in AMD at the moment. I'm loving it. Maybe too extended right now. Look at all these green days, and today gapping up. Some consolidation and pullback will be healthy here, and then it needs to hold. Let's talk about energy, because I believe this is very important right now. Energy gap down to the 50-day average, but holding that. Watch this level. If it holds, then I think it could be entered, and then you put your stop loss under the 50-day average. I'm really liking energy. Or you could do ERX, which is the leverage 2X of XLE. USO is probably the most important chart right now in the market. It was breaking out of this. If we go on the weekly, you're going to see since 2018 high, it was breaking out, and now it looks like it's pulling back. If you hold stocks, you would want this to continue dipping, because then that'll be bullish for us. If this continues to break out and the war continues, then it's not really good for stocks, and maybe you could go long on USO, because then if it does break out, you have up to back to 300, which is probably the next major resistance, which is a very big move. But hopefully that doesn't happen for our sakes and my holdings. Lastly, I want to end it with MAGs. This is the Magnificent Seven. Mega cap stocks, the best 7 companies right now in the market, like Nvidia, Microsoft, and etc. Been getting hit hard, but I believe an entry soon with a loose stop would be a good risk to reward, as you could have a stop loss about 4 to 5 points below, and then you could target the high of 69. It's like a 10-point move right there. But if you have a tighter stop loss, I could also see that, or be patient, wait for the moving averages to catch up. But this is probably a good area to be exposed to the Magnificent Seven stocks. And that's it, guys. Peace.